Well, good morning and good afternoon, and thank you so much for joining us today. Before we get started, I would like to briefly introduce our speaker, Karl Andersen, the founder and CEO of AVG Group. Karl is an entrepreneur by background, having started 5 companies during his financial career. He has been a partner at a commodities-based broker-dealer and a founder and partner for an insurance-linked securities fund, which he sold in 2012. He then started a reinsurance company hedging public pensions liabilities until founding Andersen's Venture Group in 2015, then continuing to launch AVG Group and the fund in February of 2021. Karl is also a board member of the Norwegian American Chamber of Commerce. And at the end of our presentation today, we will have plenty of time for questions, and we really encourage them. So please use your Q&A chat to submit all questions over so we can answer them accordingly. Gentlemen and Karl, I will let you get started.
Thank you so much, Lindsay, for that nice introduction. So yes, as Lindsay mentioned, my name is Karl Andersen, CEO, founder of AVG Group Sarl. I am also the Climate Technology Fund One. I'm joined today with Rolf Wikborg and Daniel Roig, who are both investment committee members and partners. I want to thank you for attending the webinar called Climate Tech Innovation: Why the Nordics Win. But before that, sort of celebration is in order. March 31st is coming up, and we're on the closing of our Fund One. If I go back, to March 1st, 2021, when we launched the fund, right in the middle of COVID, it seemed impossible that we'd actually get off the ground. So thankfully, we'd been sort of marketing this fund for a period of time. We were blessed with some institutional Japanese investors that believed in us. And so we reciprocated by investing in a variety of companies, 8 companies to be specific, 2 more in the pipeline. We're on target to close with 50 million. 2 of our companies are being purchased by SPACs, which is kind of amazing. One of our companies is going public. Several now are going through additional rounds of financing. Target return for our fund is about 27%. We've already made 3 distributions from cash flowing companies. So the portfolio is doing great. And we actually never anticipated, to be honest with you, that in the first year and a half, 2 years, we'd be looking at exits already. So it's sort of been an incredible run since COVID. We are launching Fund 2 on May 1st, but that said, we're really in love with our Fund 1. The portfolio managers, the portfolio company managers, great guys, great companies, really focused and dedicated. So I'm going to set the table a little bit, zoom out for a second, and then we'll get into the slide deck. But across the board, it's a really exciting time for climate technology globally. I was actually just down at an event in Washington, D.C. At the Norwegian Ambassador's house, and it was an EV seminar panel with the Deputy Secretary of Transportation. And the only thing that was really talked about was the Inflation Reduction Act, an act having nothing to do with inflation. But anyways, we don't care. A lot of tax subsidies and great breaks for climate technology. It's, people are saying it's been the largest since the Paris Accords. It's great. We think this is just gravy for our investors. We never built it into the portfolio modeling. 2 years ago, you still had senators bringing snowballs down to the Capitol floor saying, is climate change real? So like a minute ago, this was not even a debate. Now we're on our way. The EU sort of countered, saying that the IRA was sort of protectionist. But now they've sort of folded, and as of sort of 5 days ago, Financial Times announced that even the EU will match sort of the Inflation Reduction Act subsidies that are going in. So I'm not going to weigh in on the politics, but this sort of green arms race of tax breaks and subsidies, absolutely great for us. Another quick thing from a high level, in sort of what we're calling Climate 2.0, is that the world of ESG and impact is finally starting to get rid of all of the useless language that has sort of permeated the business. WEF, World Economic Forum, SASB, TCFD are all combining to create something called the International Sustainability Standards Board, or ISSB. is sort of the equivalent of the IFRS in accounting standards. So that's being standardized. That's great. The SFDR, Articles 6, 8, and 9. We're an Article 9 fund. And so there was, for the longest time, no consensus on how this would be done. That is sort of finally shaped up. And now asset allocators, pension consultants, investment bankers, service providers, they can all get their heads around now what they need to do and how they speak about it to both their constituents, investors, and the market. So why the Nordics? Why do they win? All right, so just a little piece, at least for the US audience. The second largest state that produces renewable energy is who? Texas, right? So oil and gas country. Norway is also similarly an oil and gas nation. Started in the 1960s, they had North Sea crude. So there's a little bit of irony that now they're leaders in sort of this area. But if you rewind the clock to say 2015, the Norwegian government recognized that we had hit sort of peak oil, or at least we were getting there. And so they spent a ton of money into the venture ecosystem, into the ecosystem of renewable energy and the like. And they also recognized that industries like solar and wind, the price points were dramatically falling, and that to remain relevant, the Norwegian government, as a necessity to remain an energy leader, had to adopt renewable energy as a focus. So, I mean, they did have 100 years of hydroelectric power, which was a good start, but they needed to develop the entire ecosystem. So they decided to enact legislation, create budgets, and invest substantial capital into the renewable energy markets. What did this mean? It meant a ton of money into the venture capital space, incubators, accelerators. They created overseas cooperatives, renewable energy clusters, really building the bedrock of a solid ecosystem. With an abundance of engineers coming out of the oil and gas businesses from offshore and maritime, these services were, and their skill sets were easily transferable into the renewable energy business. As a result, we now have 82% of cars sold last year being EVs, highest per capita in the world. We have 98% of domestic electric production coming from renewables. And even through COVID, it was just a dramatic shift, a dramatic amount of investment into charging stations, electric ferries, portside charging, whole host of innovation in hydrogen and maritime technologies. So it's really been a rapid development. Also, Norway has remained a leader in sort of the ESG world. The Sovereign Wealth Fund helped develop things like the UN PRI, et cetera. But you can't have good growth without a nice bubble, right? So what happened was from 2015 to 2020, this whole ecosystem, call it Climate Tech 1.0, was rapidly developing what we call smart city, smart society type technologies. And the issue with smaller countries, let's say, is that getting growth equity has always been an issue. But public markets, there's an abundance of capital. So a lot of these venture companies went to go list on the Euronext or the Oslo Børs. And what that created, obviously, was a run, extreme valuations, a lot of capital flowed from the public markets into these venture companies. Awesome growth, and then awesome, spectacular crash on the backside of it. But every boom and bust has a silver lining. The best part is then the second generation technologies come out of that. The companies that can withstand, commercialize, and survive are the ones that emerge. So these are the companies that are our portfolio companies and our target in the deal flow. So that's great. I would just say a final key takeaway in this intro, and then I'm really going to move on. So is that it's not just about innovations. A lot of people focus on how much innovation is happening, who's making the next big thing, or et cetera. But it's really, does the society, do investors, do users actually adopt the technology? Does it make its way into an actual ecosystem? And this is where I think Norway really, and the Nordics more broadly, really set themselves apart. You have a rapid adoption of the whole society. Take charging stations, for example, having had used rapid chargers, apps. They've gone through the heartache of getting in fistfights and queues at the charging station places. They're figuring out what works and what doesn't work. So when our job is to invest as a growth equity fund and bring them into the United States or outside, we have a lived experience of what these technologies can do and what they can't do. So I think that's super important, because in the US, you're always looking for, well, how do you know it will work? Well, we have a laboratory of innovation that we've been able to test and get results from. So our team has been pushing this thesis for years. I've been, in the trenches since 2015, helping companies come over from Norway, enter the United States, etc. We launched the fund, and then finally, the Holy Church of McKinsey came out with this nice paper. Now I'm going to try and say it, but it's a mouthful. Playing offense to create Nordic sustainability champions. The bottom line is they're basically saying is that they recognized that there's sort of a Nordic Silicon Valley that's emerged, with the ecosystem being a true hub for renewable energy technology. So this is a nice ecosystem. We've been blessed to be in it. We've been blessed with a great amount of investors. And so from here on out, and a great team that we've been working with. And so with that, I just wanted to introduce Rolf Wikborg, who can introduce both himself and Endra, and then Daniel Roig as well. So Rolf, you're on mute.
Thank you, Karl, and nice meeting you all. Good morning, good afternoon. My name is Rolf Wikborg. I'm based in Oslo, Norway. I'm a partner and on the investment committee. I have spent 16 years in New York as a merchant banker, a few years in Mexico before that, and was predominantly in the maritime and energy business of managing equity funds and debt funds. Equity funds with the likes of Varde and GATX, and debt funds with NIBC in Holland. We lent out $1 billion in debt to various maritime and energy companies the first year of operation of the debt fund. And we got lucky on some of the equity deals we did. One maritime deal we bought for $400 million and sold for $800 million a year and a half later. I've been directors of public companies in New York and Norway. And then I will introduce my colleague, Endre Grenmyr. He is sitting in Norway as well, and he's the CIO of AVG. His background is educated in France, worked many years in Germany for a merchant banking firm. And then he moved to Sweden, to Stockholm, to work with the large fund called EQT, one of the largest in Scandinavia. And then moved back to Norway with Kistefos, a major investor in the growth company is also a partner in the firm. So Daniel, you're next.
Thanks, Rolf, and good to meet everyone. I'm Daniel Roig, and I'm one of the partners and a member of the investment committee at AVG. I have a background in electronics, engineering, and obtained my MBA from the Harvard Business School. I was also involved in the Sustainable Energy Program at MIT. As an entrepreneur, I have started and managed several businesses, including the creation of investment funds in the real estate and technology sectors, where I have been directly responsible for raising and managing over $1 billion in equity and debt financing over the past 25 years. I'm currently based in Mexico City, where I head our Latin America office. Also in our team is Jim Lillis, who is our CFO and is based in New York City. He had an 18-year career at BlackRock, the world's largest investment management firm, initially serving as the controller of BlackRock and was on the team that managed the IPO process. He also was CFO and treasurer of BlackRock's commercial real estate lending group that managed over $2 billion in assets under management for institutional and high net worth investors through fund structures. Karl, over to you. You're on mute.
Thanks, Daniel. So, and then, I'm Karl Andersen, and I was already introduced. Our board of directors, so Anka and Nick are in Luxembourg. We're a Luxembourg-based fund, so they are sort of compliance and second opinions there. Mark Potter is with me in New York, as is Zeph and Brenna. So, okay, Climate Technology Fund. So basically, the backdrop of this, I guess everyone's aware. We're sort of in this mega trend. Everyone's trying to reduce emissions, getting to net zero targets. $130 trillion of committed capital, or so says these reports, all in an effort to stay below 1.5 degrees. major funds, Rockefeller, Brookfield, all sorts of climate commitments from funds, and also from oil majors investing into this sector. So again, climate technology 2.0, very different than the first round back in the early 2000s with Kyoto Protocol, et cetera. This time, energy is really being disrupted by technology, and it's really sort of here to stay. Differentiated value creation strategy. This is really where the Nordics shine. We work very closely with the Norwegian government on developing new companies, deal flow. We're connected to the scientific community, so groups like SINTEF. We work really closely with the clusters. Clusters in Norway are basically sort of these energy sort of research and development hubs and companies that come out of there. Some of the largest companies that have come out of Norway have come from these sort of smart energy clusters, et cetera. Highly experienced team. Our team is, I think, the best in breed. Obviously, we have 5 members on our investment committee team. For sort of a smaller fund, I would say this is a lot, but it gives you perspective. And in a dynamic market like climate technology, where things are constantly changing, which power production is going to be the leaders at hydrogen, these sorts of things. It's good to have a solid team with a solid track record coming to the table to look at risk and risk-adjusted returns. So so putting together the right team, I think we have it. Article 9. Article 9 under SFDR, for people who don't know about it, it's basically a commitment to investing into green and impactful companies. We take a leadership position in this world. We have worked with KPMG Sustainability to sort of help define sort of industry vernacular around how this is implemented. We've worked with various groups, Mercer, and a variety of groups to try and figure out, what are the best industry standards for implementing things like Article 9. So we've been working on that for some time. And then a high risk, adjusted return. Our target right now, it sort of comes in at 27%, but the market dynamics are such where, we're super optimistic. You have groups like SPACs who have been looking for target companies, which we mentioned 2 of our companies are a part of, and sort of this, there's been this venture investment, but then these sort of bigger companies really need deal flow. And so they're willing to pay a premium for these sort of growth companies. They need to be able to allocate 100, 200, 300 million in ticket sizes. So we're optimistic on the exit possibilities with our companies. Rolf.
Yeah, with regard to Norway and the Nordics, it's known that the Nordics are politically stable and reasonably predictable. Has very large government backing on what they're doing. A very large part of the capital market in Norway is controlled by the government, by the state. And we are early adopters of the climate technologies, maybe related to the fact that we have made a lot of money. I mean, the $1 trillion Norwegian oil fund is well known for taking some of the oil earnings in and investing worldwide, and also supporting technologies and the new renewable world. I'll come back to a little bit more government agencies, but as mentioned on this summary here, it's advanced R&D. We just signed an agreement with a research center called SINTEF, as Karl was mentioning, with 2,000 research people in cooperation with Japan, because Japan is coming here to Norway to look for new technologies in the energy sector, etc. And part of finding the right companies also and supporting the right companies is having a stable and attractive financial market. The Norwegian high yield and the bond market in Norway has been well known in the energy markets for decades. That is the faster, cheaper, and more reliable bond market than many others, and surprisingly large compared to the size of the country. A lot of American capital has for decades been investing in the Norwegian bond market. And you know, some of the companies that we are involved with have had access to this bond market with non-amortizing bonds, etc. That makes it easy to grow faster when you are in the early stage of the cycle. Karl?
Yeah, well, I think we sort of covered this. These are just some statistics about growth in the energy transition. Obviously, I think a lot of this is pretty well mapped now in sort of the climate 2.0 markets, wind, solar, hydro. These markets are set to grow substantially over the next several years. Industry specific, steel, variety of corporates trying to get in and decarbonize their value chain. So they're realistically building a lot of these in, and so the demand is sort of through the roof. Distributed energy, I'll just spend a minute on this because this actually incorporates a lot of our strategy. Energy now is not sort of centralized as it used to be: oil and gas, nuclear, et cetera. Solar, wind, microhydro, anaerobic digestion, and batteries. Batteries are the key. Storage of energy is obviously become a big concern, or the big market. So what we do is we actually combine these. In what a trend is in Norway and the Nordics is headed this direction. Basically, the combination of solar and wind connected to batteries, sort of a smart battery that has a smart battery that can trade against the grid. And this helps utility grid operators in the sense that they have instability on the grid, and they're able to sort of lay off or stabilize some of their grid. In addition, it's not just usability of it's nice to have renewable energy, and in fact, the Pentagon, the Pentagon last year actually issued a paper saying it's a security concern of attacks on the grid, and so you see this more frequent. Actually, even in Japan, some of the utility companies that we've spoken with, they're saying they get 150 attacks a day, unique attacks from the Chinese attacking the grid. So to have distributed energy is something that's extremely important. Also, when you look at the electrification of the new economy, it is distributed. Power can be generated in a variety of locales, and it enables corporates, enables individuals to actually take ownership and profit from sort of a new electric economy. And that's what's happening in Norway. Even grandma, grandpa have batteries at the home. They can peak shave or sell against the grid. So it's really a way to empower individuals, corporates, and the like at the same time. And a little bit, we do call it distributed energy. That's what it is, or distributed generation. It's also a nice way to talk about it because it's a little less, renewable energy comes with sometimes its political nature. Distributed energy, it's easy to talk about, and people enjoy talking about it. Government?
Yeah, what is somewhat unique in Scandinavia, Finland, Sweden, Denmark, and Norway is that there is significant government support. And to speak about Norway, we have the benefit in most of our investments with various government-owned entities. And I will mention a few of them here. To the left is the Innovation Norway. They pretty much have an office in every city of Norway. And more so, they also have a representative in the embassies around the world. And it's helping everything from small investors that is looking for a startup soft loan to industrial giants that need help and assistance in reaching other government offices and being introduced to panels of hired experts, industry experts, to evaluate on behalf of the government whether this or that idea could be a smart deal to support from the government point of view. You also have Norfund that is far beyond Norway, which really is built up as billions of dollars supporting developing countries. And one of our portfolio companies, they are in South Africa and Vietnam and Brazil, and they have a joint venture not only with the Norwegian Norfund, but all with equity, but also a Finnfund, which is a Finnish state-owned company. And then you have Invest in Norway. We also have in one or two of the investments we have. And the benefit of having them in is not necessarily that we need their money or the company need their money, but the fact that they are a second opinion and they have an ability to evaluate whether this is a good deal, good people with a good record, whether what the other companies in the same kind of activity is involved in, etc. So we find them extremely useful as a partner. And they are not really bureaucrats. They are hired McKinsey, Goldman Sachs, international experienced people with local expertise that can add a lot to the project. Another company called Enova, Enova is a large government agency that supports some of the hydrogen activities that we have with one company. And one of the companies that received $40 million in pure grants for developing tree hubs for producing green hydrogen. So it's very useful. Nysnø is a government agency as well, and investing equity. And SIVA is a cluster and a support of government subsidy schemes. But beyond that, I think it's important to mention that Statkraft, the fully owned, a state-owned company in Norway, is the largest producer of renewable energy in Europe, in solar, in hydroelectric power, in wind, in offshore wind, etc. And beyond that, you have the Norwegian company, oil company called Equinor, that used to be called Statoil. And they changed the name in order to really prove that they are green. And today it was announced they invested another $30 million into a solar company called Scatec. So they're using the muscle from the oil to really support the various industries. And then, of course, you have the oil fund, which is $1 trillion that also are investing in renewables. Karl?
Yeah, thank you. So, I know we gotta, keep moving here. So this is effectively, if you take, nothing else away from the presentation, this is a great slide. So basically, we are not venture investors. We don't get involved in the early stage, IP, that sort of thing. Where we get ourselves involved in is at the growth stage. We understand that all this money has been invested into the venture ecosystem. There's a ton of companies with great IP. A lot of engineers created a ton of great companies ready to go, have clients, etc. The issue is then they need markets. They need the United States. They need Japan. They need to scale it. So we're here in New York. Rolf is obviously in Norway. We bring them in and we fast track them into the United States, get them a Delaware code, set them up with the institute, help them guide the Inflation Reduction Act, and then find investors either for exit, trade sale, or partners. And that exit universe is becoming enormous. So once you institutionalize these companies, once you help them build the data rooms, hire the right management, CEOs, et cetera, C-suite executives, et cetera, you get them prepared for the next valuation. And that is where all the margin is made, to be honest. So AVG really doesn't have that much by way of competition. If we did, they wouldn't have been so desperate to go to the public markets to try and get that public money. So we write tickets between 1 to 10 million usually. So it's a wide variety. I would say, most of these are sort of, early to, I would say late stage venture, early growth, if I can be honest. So anyways, that's a majority of the thesis. Daniel?
Yeah, one of AVG's main differentiating strategies lies in its ability to bring Norwegian technology to the global markets. We currently have offices in Oslo, Luxembourg, New York, and Mexico City, and we'll be opening Japan and Singapore this year. This international presence in Latin America, Asia, Europe, and the US offers our portfolio companies a key advantage to help them scale globally. A clear example of our deep involvement with portfolio companies can be found in the US. As we've already discussed, in August 2022, the US passed the Inflation Reduction Act, which provides $370 billion for climate and clean energy provisions. AVG has formed a team with specific knowledge of the IRA in order to help our portfolio companies expand into the US market and take full advantage of it. Karl?
A couple of differentiating strategies. I won't spend too much time here, but we have actually set up and established AVG Insurance. I have an insurance and reinsurance background with one of my companies. So the reinsurance market, obviously, they've spent a substantial amount of time in sort of the climate industry, catastrophe bonds, they protect hail, forest fire, et cetera. obviously they're concerned about the environment and they understand the real risk, the actuarial risk of climate change. They have then decided to focus much of their attention then on renewable energy as sort of a hedge or natural hedge to their exposure in those areas. So many of them have become highly creative with circular economy type policies that we can tap into via our insurance vehicle and protect these portfolio companies as they grow. The issue with climate tech for most of these portfolio companies it tends to be that the capital markets can't underwrite them or doesn't understand how to underwrite them and gives them disfavorable terms. When we come in, we can actually attach certain types of insurance to them and then take the tech risk off the table, providing either a cheaper cost of funding from the capital markets or just protecting their portfolios and enhancing equity returns. One other differentiating factor is also carbon credits. Most companies, most portfolio companies come to you and say they understand the carbon credit markets. I don't think many people understand fully the carbon credit markets, to be honest. But we register with the gold standard, Vera, and the international IRA. Now, the IRA, the Inflation Reduction Act, has kind of changed that dynamic here in the US, but the renewable energy certificates and guarantees of origin internationally, those still, it's a very robust market. Oil majors buying those up as much as you can produce. So it's a very great service to the portfolio companies and adds additional alpha to the portfolio companies. Daniel?
Yep. Summary of our key fund terms. I mean, the fund is Luxembourg-based and has a Delaware feeder fund. Depending on each investor's tax strategy or preference, they can invest directly in Luxembourg or in the Delaware feeder. In both cases, all terms are the same. Our first closing was on March of 2021, as we've already mentioned, and our final closing date is March 31st of this year. We know that we are only a couple of weeks away from the final closing, but the investors that make a firm commitment to invest before this date, but foresee a longer final due diligence period, we could be flexible to complete the due diligence within the next couple of months of final closing. Based on our current projections, we're estimating a base case net annual IRR of between 20 and 27%, with a multiple of investment capital of about 2.3 to 2.7. And we are structured with a standard European waterfall so that the investors get their return of principal first, then a minimum return of 8% per annum, and then the GP can take performance fees. We have a standard 220 structure with 2% management fee and 20% of profits as performance fee, which, as I mentioned before, is only received once investors get their capital plus 8% per annum return. We contemplate having an investment period of 4 years with 3 possible 1-year extensions in case exit conditions are not ideal at the 4-year mark. And our target fund size, we're thinking probably will be closing around the $50 million mark. And we have a minimum ticket of $1 million, although we could be somewhat flexible with this minimum in some specific cases. As a fund, we usually take significant minority stake positions in the companies we invest in. At present, we're invested in 9 companies and about to close 2 more, and have a target to invest in a total of about 15 companies. Karl?
Yep. I would just add there, we have made 3 distributions, so those have already been returned to investors. Yeah, now I guess, we can talk about the portfolio companies if you'd like. I would say just, keep these sort of, brief for a minute, just to give the people a flavor of what we're invested into. Rolf, I guess you do Alternus.
Yeah, sure. Alternus is an Irish-based, Oslo-listed solar park company with solar parks in 8 different countries in Europe, and also now an office in Charlotte, Carolina, with 7-8 people developing the US market. We have given a convertible loan at a good return to them at the holding level, and have also introduced a SPAC that they have signed. Is under SEC approval process now, and we hope it will de-SPAC in Q2. We think it will de-SPAC in Q2, and at a very favorable rate to the company and us. North Solar is also a solar park company, but concentrating on developing countries together with the North Fund and the Finn Fund, as mentioned earlier. They have investment grade credit behind their long-term contracts in Brazil, where Japanese conglomerates are involved on the shareholder basis in Vietnam and in South Africa predominantly. But it's a good company with very, very solid base, also listed on the exchange. Not always pricing is as an investor would want on the shares, but not so important as long as the underlying company is good.
Hybrid, yep, really quick. This is a second generation wind technology. Everyone sees these big wind turbines spinning like this. This is actually modular and spins horizontally. So it can be put on rooftops. It can be, it stands 9 meters tall. And when you configure them together, it actually shrinks the space. They actually 3 equals 4 wind turbines. Best part about them is that they're complementary to existing solar installations and battery installations. So where you already have solar to maximize your PPA agreement, you can actually attach these to existing solar areas or existing wind farms that are sort of onshore. They're building an energy management system that helps configure all of these things. And they have a plan to move into the United States with utilizing the production tax credit from the Inflation Reduction Act. ArborFlame is a next company. ArborFlame is a substitute for coal. Think about it as the hybrid car of coal. They make an organic black pellet that can burn in the furnace with coal-fired power plants or substitute at 100%. It's a 90% reduction of CO2 emissions. And so we invested in that company, and as a co-investor, Investinor also invested with us. Greenstat?
Greenstat is a predominantly a green hydrogen company with 3 significant green hydrogen projects backed by the Norwegian government, but also wind and solar, as well as charging stations for cars. But it is the green hydrogen for trucks and green hydrogen for ferries between Norway and the continent that is their main claim to fame.
CleanBay. CleanBay is actually also in talks with a SPAC. It looks like they may be purchased entirely. They're an anaerobic digestion company taking chicken waste and converting it into renewable natural gas. BP is their offtake for both the RNG and the carbon credits. And yeah, the fantastic company. They have about 26 plants that they're intending to build across the United States. And one of these companies that we invested in only a year ago. Now it's on its way to exit. So Hypothermics.
Yeah, Hypothermics develops and supplies compact biotechnological facilities that convert organic waste into renewable energy, such as biogas, fertilizers, and protein mass. But they do this in a significantly faster way than other solutions on the market. Hypothermics uses a type of bacteria obtained from heat sources such as underwater volcanoes. This bacteria is used in reactors, which can convert the biomass into biogas or protein in a matter of hours as opposed to days. The process can be up to 6 times faster, but it can also yield up to 50% more biogas than the regular process. Yeah.
All right. And we're going to, kind of fast forward here just really quick because I think we want to we see some questions actually for me. The last thing, second to last thing, I'll just say. So for ESG reporting, we've simplified it. I know investors have people they need to answer to, whether you're, family office and you have your multifamily office and you're reporting, to your family office constituents or your pension fund, your trustees, et cetera. So we say for every $1 million that you've invested, what happened? It's kind of a simple way of thinking about it. 5,921 metric tons of carbon were taken out of the atmosphere. So that gives you some language. Also, then the ESG ratings, we use World Economic Forum, TCFD, SASB. All companies are not that green. In fact, the average for solar companies is around 60%. So the whole topic about greenwashing, we think it's better to solve the problem than sort of pretend it's not there. Global funds like BlackRock kind of killed that by saying we invest in oil, it's still green. So, but anyways, we are trying to be honest about that problem solve, and we give you direct results there. And then I would just say, yes, thank you for listening. Again, we are going into our final close, and I think our team, we've really been able to track Norway and the Nordics. We're leaders in that ecosystem. We understand the deal flow. We know how to underwrite it. We have global offices, so we're ready to bring them, into foreign markets. There's a big trade set up there. We have unique technology that can be easily adapted into the United States. The companies are hungry, excited, and obviously they're selling to much bigger institutions. And with your support, if you would, again, as Daniel mentioned, if you do decide you want to come in before March 31st, then we can extend the underwriting period through April. If that's too soon and you want to look at Fund 2, we are open for business. So we have a great host of deal flow. We have an anchor investor already. So we have a lot of momentum, a lot of traction, and we're very excited to be speaking to you. And with that, I guess we'll take some questions.
Great. Thank you so much, gentlemen, for the high-level overview. And again, we encourage questions, so please use that Q&A chat to send those over so we can answer them today on our webinar. We have quite a few questions that have already come in, so I'm going to jump right in. Gentlemen, let's start from the beginning of how this process works, right? So talk to us a little bit about how you find the investment opportunities at the very beginning.
Well, I can start with that if, Rolf, you have some,
Sure.
also some ideas. I've been at least in this business as it relates to Norway since 2015. I've really sort of buried myself into the sort of the culture and ecosystem. As being a board member of the Norwegian American Chamber of Commerce, I really started helping individual companies come into the United States and underwrite them. But I got a close familiarity with Innovation Norway, New Snow, and the government, and what they're trying to accomplish and what they intend to do. So they would bring companies to us quite frequently. Got used to the clusters. I've met a variety of scientific organizations. And so we've really sort of, and I've done even stuff like, write resumes, write recommendation letters for kids going to college. And so really trying to be nice and help develop the ecosystem. And that's been reciprocated by, meeting all these engineers, and the like. So the deal flow is organic. And we know the inside track of these companies. I don't know, Rolf, if you have something to add.
Yeah, sure. I mean, typically, I would say, probably we only do 1 out of 10 deals we look at. But the attitude in the Nordics is very much that a good idea is only good if you have good partners. So there is an opening for partnership, and we had a history of having very large limited partnerships where each family took sort of 3% of a deal, because together we are stronger. And that's the attitude, and that helps us because now we have momentum in Nordics. We are known, so we get access to deals, and it's a small place. It's a small market. But utilizing the universities and the clusters and having the government system that also calls us on deals, can you participate here? Because they can't take a lead role. They need a equity partner to do the support that they are allowed to support.
Great, thank you so much. Now, how do you ensure and remove the tech risk, and can anyone access your insurance platform?
Oh, that's a good question. Only if you become an investor, because that's the answer there. It depends on the insurance. So or it depends on the technology. Mostly the policies I've seen are for power production. So things related to wind, solar, anaerobic digestion, biomass, these sorts of things. Power production is easier to sometimes underwrite, but you do see it in EVs, you see it in charging stations. And then batteries, obviously batteries are a big thing now. So how do we take the risk off? Basically we don't actually assume any of the risk at AVG Insurance. What we do is we retrocede it into the reinsurance market who really wants it. Now, it's worked out for us because we both look at these deals from an equity investment perspective as an underwriter, but also, having spent years in the reinsurance business, I understand how to write an insurance policy or create an insurance policy, looking for the provisions that need to be, executed on to remove that risk off the table for lenders. So usually in an insurance-linked security transaction, like in catastrophe bonds, for example, you have to understand how these insurance companies and reinsurance companies work in order to get it done. So yeah, as we gain that underwriting experience, we're going to probably expand the platform to be able to underwrite and provide primary markets. But right now, this is closed mostly for our deals, portfolio companies, et cetera.
So I also have a background from Lloyd's of London, and what is important to understand, this is not traditional insurance. This is really getting an insurance company with a strong credit to underwrite the output of new technology. So they're vetting the technology, and we might use the DNV and other classification society to vet that process. But with that, we can insure the debt, we can insure part of the return on the debt, and even part of the return on the equity, guaranteeing that this new factory with this new technology works. And that's quite unique, and it's not spoken a lot about in today's environment.
Great. Now, you mentioned Japan. So can you give us some background on why you are in Japan?
Sure. Well, one of our colleagues who's not here on the webinar today, Mark, had friends, and we've had investors over the years from Japan, and so we had rekindled some relationships there during the COVID period. And one of the things that we recognized in Japan was that usually, I always thought Japan's way ahead of the curve in terms of technology. It almost feels like Tron, when you go there, it's like everything works faster, et cetera. But in the case of climate technology, what we're recognizing is that they're actually lacking a lot of this new innovation, that the CVCs, or the corporate venture capitalists, they have not caught up to the times. So they're looking to sort of import or acquire their way into these markets. And we, Rolf and I have been there half a dozen times over the last, year or so, meeting with like the steel industry, groups like Tony Toshiba, all these different corporates who are trying to decarbonize their value chains. So part of our, part of AVG's, I think another nice part about it is we're really trying to solve the problems, and for the companies, they become our investors, and then we reciprocate. So it's a constant and continuous dialogue. And the Japanese, I don't know if anyone's ever worked with them. They're absolutely wonderful to work with. They're the nicest people on planet Earth, and we really enjoy their cooperation. So,
and for many of the companies, it's great to have a good start and get going in the Nordics. But the important thing is to get into the IRA market in the US, but also get out in the Far East through the Japanese trading houses and the Japanese international companies.
Amazing. Now, how can AVG and its investors benefit from the IRA?
Basically, for investors, I think they get it through the returns of the portfolio companies. The portfolio companies themselves, we've brought several of the companies over here to the US, and we really sit down and think about, okay, how are they producing their product? And is this going to be a production tax credit or an investment tax credit? They have to set up in Delaware, potentially move their IP, et cetera. But we have some law firms, one being Norton Rose, then we have in-house counsel that really goes through and analyzes whether it's wind, whether it's solar batteries. There's a variety of different, it's a pretty long document. It's pretty straightforward, but actually originating the tax credit, you have to do with thought and consideration, because then how you originate those will give you the value when you try and sell that tax credit. But oh my God, what a lift. You're talking 30 to 50% in some cases. $100 million comes in, 45 million comes back. It's unprecedented, but I would say that it's a race a little bit. I would say that there's sort of a 3-year window where you really need to be aggressive on this. And so that's why we have sort of boots on the ground. We have retained counsel. Every company we do an analysis and then figure out how to build that into their strategy. We do not price that into our business model with the portfolio companies. So they should be able to survive on their own without the subsidies. Okay. But with that, it gives you a tremendous lift on IRR. So hopefully the investors get the benefit of that.
Yeah. Okay. We have time for probably one more question. So some of the companies are publicly listed. Is this a strategy, or can you give us some more background on that?
Sure. Some of the companies that we invested in did list fairly quickly. At least Norsk Solar did in that case. Alternus did list, but we are a senior secured lender in that case. So we have a convertible note with them. And so that's been interesting, and a lot of plays that we can actually make on it. By and large, most of the companies, I think it's disproportionate that some of these went public. Normally, most of the tech that we see will be sold in a merger or acquisition environment. 95% of cases before the Oslo Børs emerged were M&A transactions. What happens 9 times out of 10 is you have engineers who left the oil and gas industry, who left some, and have built a really great mousetrap in renewable energy and have solved for a particular thing in a value chain. And so then those are just reacquired by either oil majors, Schneider Electric, large groups, trading houses, et cetera. And that's most of what's going on. So I would say that, going public, I don't like it personally most times. I think it's, especially in climate tech, I think there's a lot of things that, the companies should look out for before they go public. But in the right situation, strong revenues, it might make sense for some of the companies, but, most we usually think about selling off in a M&A transaction.
Yeah, and as a general policy, we usually invest in private companies. We're not looking for companies that are already listed.
Exactly. Yeah.
Thank you so much. Well, gentlemen, this has been amazing. High-level overview today. Is there anything else that we want to say before we sign off to everyone for attending today?
No, just thank you for being a good host, Lindsay. It's been great. And again, our final close is March 31. Please get in touch with Lindsay, ourselves, whatever. If you have questions, obviously, we're willing to spend a lot of time deep diving into what we do. We have a data room on Intralinks, so you can do as much due diligence as you want. The companies are there, et cetera. But we really appreciate your time, and thank you for hosting.
And thanks everyone for attending.
Thank you.
Yes, thank you so much to our audience and our attendees. We will be following up with you. And again, we would love to get you in direct contact with the team here. So we hope you have a beautiful Thursday and we will be in touch. Have a great day, everyone.
Thank you so much.